Hello and welcome to this short overview of the new landed cost functionality introduced into Opera 3. My name is Steve Power and I'm one of the product specialists here at Pegasus Software, and over the next couple of minutes or so I'm going to discuss and show how landed cost works within Opera 3 and the advantages this can bring to Opera 3 users. So what do we mean by landed costs? When you purchase an item from a supplier, there is the unit cost you'll pay for those items. However, there may be other costs incurred in getting the goods delivered to your premises, particularly when you're buying these items from abroad. Landed costs are those additional costs. The total cost of a landed shipment includes the purchase price, but also includes freight costs, insurance, warehousing, and any other costs. In some instances, it may include customs duty and other taxes that may be levied on that shipment. Knowing both the purchase price and the landed cost is critical because this total actual cost needs to be considered when defining the selling price so that you know the profit margin you're going to make when you sell these products onto your customers. If a stock item is subject to landed cost, then when the stock receipt is posted, both its unit cost and the landed cost are used to calculate the combined cost of that receipt. This applies to all types of stock: FIFO, non-FIFO, and batch and serial traceable items. If you have activated landed costs, then there are a number of steps you need to go through to set the system up. Firstly, you can go through and define landed cost groups. Within stock maintenance, we have a new option for these landed cost groups. These aren't mandatory, but it does make it easier to operate landed costs. These landed cost groups allow you to group together different landed cost types for reporting and selection. For example, you might have 3 landed cost types of, say, road, sea and air transport. You might want to link these 3 landed cost types together under one landed cost group called, say, freight. So let's create a landed cost group for freight. Note, we can also define a nominal ledger code to where the landed cost value is to be posted for this landed cost group. This is for the inward movement into stock and should be an account in your P&L. There is a default nominal account for landed cost inward movements set up within the nominal set options. We only need to specify a nominal account here if we want to override that default. In this example I will. I'm going to post it to a freight costs account. And if we list these landed cost groups, we can see there's a range of them already predefined. Secondly, we need to define landed cost types. Again, under maintenance, there's a new option for landed cost types. The landed cost types are key to the operation of landed costs within Opera 3. These are used to define the individual elements that build up the landed cost total that will be entered on a purchase or stock receipt. If we create a new landed cost type for, say, sea transport, and I'm going to attach it to the landed cost group of freight. Once you define the header information for the landed cost type, you can then define the calculation method. There are 3 methods that can be used to estimate the landed costs. Firstly, we have the fixed value per unit item. This allows you to define a fixed value. This value will be multiplied by the quantity of the item being received to give you the total for this type of landed cost. Secondly, we have a percentage of a line cost value. This allows you to define a percentage value. This percentage will be applied to the cost price of the item being received to calculate the total for this type of landed cost. And thirdly, we have the aggregated cost percentage. This is a special type of landed cost. Some landed costs, such as import duty or anti-dumping duty, are charged in addition to normal customs duty. They are calculated as a percentage of both the cost of the item plus a sum of some of the other landed costs. In these circumstances, the aggregated cost method allows this type of landed cost to be defined. It will then automatically calculate these values when the item is being received. Okay, for this sea transport, let's say that we have a fixed charge of £1.75 per unit being delivered. Note, we could also specify a nominal account. Remember, we only need to do this if we want to override the nominal account specified against the landed cost group for this particular landed cost type. In my case, I will leave it as the nominal account on the landed cost group. When we create landed cost types, we do not have to enter a default value. It is possible to leave this field blank. This allows the value of the landed cost to be entered at the receipt stage, either on a purchase receipt or when a stock inward movement is posted. And if we list these out, we can see there's a whole range of landed cost types already predefined. Now that we've defined the landed cost types, we can assign them to those stock records that will be subject to landed costs. So let's go into stock processing and let's go to a stock record and assign landed costs. Let's apply the landed costs to this particular stock record and let's select new to add those landed costs in. First of all, let's add in the sea transport for this particular item. Note that it's pulled in the default value of £1.75 from the landed cost type, but if this stock record has a different value, then I can override it here. I'm going to apply this cost type, but I'm also going to include it within the aggregated cost calculation. And I'm going to save it away. Let's add another landed cost type of insurance. Note, this is calculated as a percentage of the line value, in this example 5%. And again, on this stock item, I can modify that from the default value. I'm going to include this cost type. I'm also going to include it within the aggregated cost calculation. Now let's try and save this away. Note, we cannot apply these landed cost types if we have ticked the aggregated cost calculation, but have not added a landed cost type which has aggregated landed costs. So let's go through and add one of those aggregated landed cost types. In this case, I'm going to select the anti-dumping duty. We can see that the anti-dumping duty is calculated at 17.5% of not only the stock item purchase price, but also 17.5% of the insurance and also 17.5% of the sea transport, because these are all marked as include in the aggregated cost calculation. Okay, let's save this away. If we go back to the landed cost form, we can untick apply landed costs, in which case they will not be applied to this particular stock record. If, however, I do want to reapply them again, I simply go back to the landed cost form and I tick this option here to apply them. So you can see we can simply turn them on and off for an individual stock record. It's possible to define up to 4 landed cost types per stock record. You might also have noticed there are 2 new fields on the stock processing form. A standard or average cost field, depending on the costing method defined for this particular stock profile, and there's also a last landed cost value. The standard landed cost is the sum of the landed cost type values, while the last landed cost comes from the value of the landed cost from the last receipt into stock. You can manually enter the standard or average landed cost value here, or you can get it to be automatically calculated by the system. If we go into Stock Utilities, Global Price Changes, there's a new option here to recalculate landed costs. If I select that option, it will now give me a report that shows all of the stock records that are subject to landed costs, showing me the cost price, the old landed cost unit price, the new landed cost unit price. In this example, it's calculating it as £25.43 per item. And I can tell the system to apply that landed cost calculation. In which case, if we go back into the stock processing, we can now see that the standard landed cost has been calculated by the system. Okay. Let's see how receiving an item into stock has changed now that we've applied landed cost to a specific stock record. It is necessary to have both the stock control application and the purchase order processing application activated to use landed costs. So let's go into purchase order processing and let's enter a stock receipt. Which purchase order? What's the reference? Notice we now have a new shipping reference. This is only available when you have landed costs activated. Okay, let's say we've received 10 into stock. Notice we have the cost price, but we also have the calculated landed cost price here as well. If this calculated landed cost price is incorrect, we have the ability to go through and override the landed cost values. Let's say, for instance, on this particular shipment, insurance wasn't applicable, in which case I can turn off applying insurance, I can save that away, and we'll now see that the calculated landed cost has reduced by the value of the insurance that we've just removed. Or if I want to reapply it again, I simply go back into the landed costs, cancel that override, and in which case we can now see that it's reinstated back to the full value of the landed costs. Okay, let's save this away and post it. Now let's have a look at the impact in the nominal ledger for posting a receipt with landed costs. Remember that we have a stock item that has been received into stock where landed costs have been assigned to that receipt. So let's go into the nominal views. Let's pull up transactions for today. Let's sort this by nominal and let's refresh the data. We know that the purchase price for the stock item was £100 each, i.e. £1,000 for that batch of 10, and we know that the landed costs were £254.31. So let's go and have a look at the current assets, stock. The current assets has a value of £1,254.31. In the stock account, it's made up of two transactions, one for the stock costs and one for the landed costs. Okay, let's go and have a look at the cost of sales. Let's look at the goods in costs. We have a transaction here for the cost of the goods received. If we go down and have a look at the freight account, the expenses and overheads for freight has a value of £254.31, which is the three landed cost values we posted with the stock receipt for insurance, sea transport, and the calculated 17.5% for the anti-dumping duty. They're posted as individual transactions into that nominal account. Okay, let's print this view. Let's make it a little bit bigger. So, why are we getting these nominal ledger postings? Well, the stock account in the current assets and the goods account in the cost of sales are defined as accounts within the nominal ledger set options. It is also possible to define the landed cost inward account in the nominal ledger options, but it's also possible to override that nominal code in the landed cost groups and even on the landed cost types, as we saw earlier. In my example, I had three landed cost types on this receipt to the one nominal account of freight. Of course, I might want to have had them posting to their own individual nominal accounts. The actual nominal postings that will be made will vary for each individual customer based upon how they've set their Opera 3 system up. The key point is that landed cost transactions are included in the balance sheet to give a much more accurate reflection of the value of your stock. Within the P&L, the true costs of purchasing are better reflected because both the product and landed costs are being recorded with each individual movement. And the profit margin on sales is far more accurate because the true costs of purchases are compared to the sales prices. Okay, let's have a look at some other reports. If we go into stock reports, let's have a look at the stock valuation report. Let's just do it for our particular stock movement. Let's send it to screen. Note that the cost price includes both the purchase price and the landed costs. We have the sales price and therefore we have the calculated profit margin. This gives a much more accurate calculation of your profit margin because it includes all of the costs associated with that receipt into stock. Let's also have a look at the landed cost settings report. And let's send this through to screen. This shows you the landed cost types that have been applied to each of your stock records. In this case, for this particular stock code, we can see that there were 3 landed cost types applied and we can see the values of those. And it also shows us the cost price, the landed cost value and the last landed cost value from the last receipt into stock. If we look at the stock processing form for that particular stock record, we'll also notice that the last landed cost has been recorded here automatically from that receipt that we've just posted. We can also look at a stock view. Let's do it just for today. Let's include receipts. And here we can see that Sony stereo, 10 of them have been received into stock, but notice we can also see the shipping reference. Remember, the shipping reference was available when we did the purchase order receipt and we have landed costs activated. This will allow you to sort receipts together by their shipping reference. Okay, let's raise a sales invoice for one of those items that have just been received into stock. So I'm going into sales order processing. I'm going to raise an invoice. I'm going to raise a new invoice. I'm going to send it to file. I'm not going to change the header. I'm simply going to go down and call up that particular stock record and invoice one of them. Note that we can see the goods selling price. We can see the cost price including landed costs. We can see the margin percentage and we can see the actual monetary value of the profit on this particular item. Again, important that the landed costs are included in the cost calculation. Let's save that away and let's post it. If we now go to the action, view totals for this invoice, we can see the goods value at 199. We can see the VAT. We can see the cost value including the landed costs. We can see the profit value and the profit margin. And we can see the total value of that invoice. Okay, and let's go back to the nominal ledger and see the impact of that transaction. So we're going to a nominal ledger view. We're going to look at today's transactions again. We're going to do it by nominal account and we're going to refresh this view. If we look at the current assets, then in the trade debtors we see the value of that invoice is now shown as an asset to us. But if we go through and look at stock, we can see there are two additional transactions in here for the cost value of the item that's just been delivered, plus another transaction for the landed cost value for that delivery and invoice through to that customer. This is a much more accurate reflection of the current value of our stock. And obviously we can look at the liabilities and the sales associated with this. As we've just seen, landed costs can be an important element in controlling the costs and reporting on the sales margins. Landed costs helps provide a more accurate valuation of your stock on the balance sheet and more accurately reflects the profit margins in your P&L, so making the nominal ledger a far more powerful and flexible tool in which to analyse your company's stock transactions. Thank you for taking this time to watch this short video. For further information, please contact a Pegasus partner or visit pegasus.co.uk.